Good morning, everyone. Today's the 24th of December. This is Brad Matheny. Merry Christmas to everyone. Let's go ahead and make a commitment today. Let's make a commitment to try to make 2025 even better than 2024. Christmas is here. We're going to have time with our family and good food, hopefully good weather for some of you. I'm out here in California, so we're looking at, we're doing okay, 68, 69, 70s, not horrible. But let's just make it better for everyone. Let's really focus on our trading. Let's focus on what we're trying to do. Let's really try to focus on some success. I want to build everybody into success. And in that manner, the easiest way for me to explain it to you is to come here and to show you not that, sorry, here. So I am going to just show you this, make it as big as I can so you don't, and TradingView doesn't have to worry about it. So the goal here is I believe anyone can do this with the right tools, with the right practice, and with the right skills. I believe anybody can take a $1,000 account and earn 40% in 20 days. That's basically 1 month of trading, just under 1 month of trading. And if you can do 40 to 50% a month using the right tools, again, and having the right skills, then I believe anyone can take a $1,000 account and turn it into a $100,000 account in a year, or take a $1,000 account and turn it into a $300,000 plus account in a year, less than a year. And it's just a matter of scaling up every 20 days. So this is basically take your trading, break it into three separate blocks at 333 each, trade those efficiently, trying to prevent losses. And if you get to 1400 by the end of the 20 days, then take your 1400, divide it into three, which would be about, doing the math in my head, about $460 roughly each. Now trade that effectively to get your 40%, and then do it again. Divide by three, trade those three efficiently. And all you're looking is 40% to 50% a month or every 20 days. That's it. And if you can keep that up and you can get up into this level, into this median level, you're going to see your account grow stupendously. I mean, you're going to be able to go from $1,000 to $300,000. That's what, a 3,000% return in a year? Okay, massive, absolutely massive. And it comes down to taking the right trades, which comes back over here. This is the 5-minute system. You can take a look at these trades. These were yesterday. This is just the sector spiders. So again, come back down here. Just the sector spiders. We're not trying to overtrade or trade a billion different things. Right here in the sector spiders, you get enough. You get enough of a movement here in the 11 sector spiders to be able to trade efficiently every day, 2 to 4 times a day, to try to target 30, 40, 50, 60% every 20 days. And again, do the math. I've already shown it to you back over here. You do the math, and I'm telling you, you can make a small fortune trading like this. I've been trying to show people how to do this on my own paper trading account, and I'm already at 50% in 6 days. So I'm already hitting this level in 6 days. I have 15 days left to go to try to beat this level. And again, it's a matter of picking the right tools. So you come in here, you look at these. These are the Sector Spider TT Scanner swing trades. This is a proprietary trading algo that I created, and they're right here waiting for you. Now, the 15 minutes yesterday didn't generate a lot of triggers. Notice that they're flat. That's because we had very low momentum. But the 2-minute and the 5-minute generated quite a bit of triggers, and we'll probably get some good 15-minute triggers today. These things typically start out, like I said, in the 2-minute, you start to get some early warning triggers here. These are the shortest term triggers, 2-minute. You can see that we're getting 31%, 26%. Again, these are 0.26, 0.31, 0.25, 0.19. These are nice, easy, very short-term triggers for zero options, zero DTE options traders, day to expiration. I like to play the 15 and the 60 minute. Okay, we didn't get many yesterday. You can see one short in XLP. It's off 0.5%. I didn't play this yesterday. I played two trades over here. I played the what was it? The XLV long, didn't really amount to much. And I played the XLRE long, which amounted to a little bit. I ended up getting about 37% on that trade, but it's very small. I'm not trying to trade very aggressively here. But again, these are right here for your use. Again, it's all part of what I do for traders to try to help you guys out. Check out my profile and learn about my services if you'd like. But the long and short of it is, let's make this a great year. Okay. Let's really make this a great year. So, what we're looking at today is a rally mode. In carryover trend, we're already up on the SPY, up $595.57 roughly. We're going to be looking at the SPY moving into this type of a moderate rally phase. So let me go down to, this is 4 hour already. So spread it apart. And just kind of like I drew yesterday, we're going to be looking at a rally phase in the markets here. Let me go down to 1 hour. No. So today we're kind of looking at a moderate rally, probably ending up in the 597, 598 area. Okay. It's going to be probably a pretty consistent little move to the upside today. Then we roll a bit tomorrow. Well, actually, the day after tomorrow. Tomorrow's Christmas, with an inside breakaway in trending mode. And then we get a momentum rally on Friday. So, what I'm thinking we're going to see is a little rally today. So, good potential for a little, maybe a quarter or 3% move up in some of the sector spiders today. Then we get a breakdown tomorrow, likely moving a bit downward back into today's or yesterday's range. Then we get another rally on Friday, pretty much moving us sideways. So, where we're at with this, guys, is we are going to be rolling a bit sideways throughout the next couple of days. Kind of just chop. I don't expect too much craziness. I do expect a peaking pattern. Remember, I do expect the markets to attempt to peak out over in this January 1st, 2nd, 3rd area. So remember, we're going to probably get some sort of a topping pattern right over in this area that's going to be pretty intense. Make that bright yellow. So we're going to roll. We're going to struggle for a day or two, and then we're going to roll into the end of the year a little bit higher, maybe back up to 600, 601 area on the SPY. Then we're going to roll into selling. And this selling is going to be, my impression is going to be, it's pretty intense. Okay. So we'll see how this plays out. This will be a good solid trend. Right here, it's going to be scalping. It's going to be targeted scalping. Okay, let's go to the QQQ. QQQ should do kind of the same thing. So we're running across this flagging formation. We should move into a moderate upward trend today. We're at 524.32, up a bit right now. We're going to be rolling up into this upper channel, up into the end of the 24th here. And then we move, oops, it's too far. So up into the 24th, there's the 24th. And then we're going to roll into sideways in the 26th. And then we're going to roll into a rally on the 27th. And then we should roll into topping out here around the 21st or 31st, sorry, into January, and then roll downward into the new year. So there's your kind of breakdown. And what we're looking for is, not necessarily this flagging formation here, but this broader flagging formation is likely going to play out as the excess phase peak pattern for the QQQ. So, we're in this channel, we're rolling through this channel, we're struggling out into the end of the year. We're probably going to end up somewhere in this topping range right over in here. And again, rolling downward from this level near the end of the year based on my analysis. So, again, SPY and QQQ are playing a very similar type of a role here. And they're basically flagging out into sideways trending and then looking for a breakdown. The breakdown pattern is likely going to prompt a low back over here around the 14th to let's call it the 13th. Yeah, roughly the 13th through the 16th, and then a secondary low back here around the inauguration. So we're going to get this roll down here, maybe to a low, is what I think is going to happen. And then a secondary low down here. And it's basically going to be a carryover of the excess phase peak pattern. So you see here, we roll down, we have to get below this low here as a breakdown level. So if we come down here and get below this level, we'll move into consolidation here and then break down to an ultimate low, maybe down in this area. And that's kind of how I think this whole thing's going to play out through the inauguration. And then, of course, be prepared because 2025 looks like it's going to be a very interesting and volatile year. So I did a special video on that on TradingView. We're looking really for some big rotations in 2025. Okay. We could get a nice solid base here, rallying up into an early Q1 kind of a peak pattern after the inauguration. But it looks like we're also going to get a big breakdown in 2025 that a lot of traders are not prepared for. So 2025 is going to be a year for really skilled traders. I mean, if you're not paying attention to what's going on, or if you don't have tools like this readily available for you, then you're going to probably struggle in 2025. Okay, let's go take a look at gold and silver. Gold and silver are still struggling. Yesterday we had a pretty flat day in gold and silver. We're looking at a breakdown in carryover mode. We are in explosive trending. I'll have to see why this bearish trending didn't come through. Long and short of it, we're looking at a breakdown trade in carryover. Then we get a Harami line. Then we get a crush. Now remember, Harami line is in futures. Futures will likely still be trading half day or so tomorrow. So then we get the crush pattern after Christmas, and then we get a gap potential. As I mentioned to you, we have to be very cautious of a further breakdown. I still do believe that we're moving up into this extended rally, but again, we have to be aware of the fact that we are. No, I don't want to draw lines all over the place. We're moving into this expansion phase. Okay, so the expansion phase here, move this out of the way, could become very volatile out here in 2025. Okay, we've moved up into what I believe is the expansion phase. We've come across this range here, which is really last year's middle range. The breakaway phase was back over here. This is 4 hour. Let me go to daily. Okay, get the chart back over here. So here's our breakaway phase. pretty much is COVID, and then here's our breakaway phase, breaking out to about here. And now we've moved over here into the expansion phase. Now the expansion phase, you can see we've cleared all of this. Nice big gap. We just moved into the expansion phase, I believe, the start of it. And what happens when we move into the expansion phase is we normally get a little low. So we come back over here to 1990 or 2003, 4. There we go. And as we move into the expansion phase, here's our expansion phase right here. So here's our kind of our breakaway phase. Let me look here, 2003, 2004. So here's our breakaway phase. Here's our expansion phase. And what we have with this, guys, is you can see how we move into the expansion phase here and we get our little lows. And this is what I'm concerned with regards to gold, is that, this is daily, and we could move into the expansion phase and we could get literally 2-3 months of this type of rolling gold low before we break into some upward trending. And so be aware that we're looking at a potential here for establishing an early low, like over in this area, setting up here in the current expansion phase. We've seen this breakaway set up. We've seen this expanded trend mode here, this nice solid expansion. That took place very clearly for us back on our current chart. But now we're into this early consolidation and expansion, which is basically we break away, we run into resistance right over here, we start to flag out, okay, and then we break to the upside. So once we get that break to the upside, then we get into a big expansion phase up into this area, okay, up into this area. And that's going to be what's coming our way back over here. Now, once we get through this consolidation, which may move down into a secondary low here, then we will expand dramatically up to the upside, taking out this high and possibly expanding all the way up to about 5,000. Okay, but we have this, and let me just move this out of the way, because the reality here would be that we would come down, potentially test this low, and then move up into the 5,000, consolidate, and then move up again. So the expansion phase is capable of an extremely explosive move to the upside. Okay, we just got to get through this consolidation first, which I showed you way back here. This is the same thing. Exact same setup. And what we're looking for is that peak, because the expansion phase rolls up to a peak, comes back down, flags out, and then rolls decidedly higher throughout the expansion phase. Then we set up in this big, broad expansion. Now, this was the global financial crisis here that sent us downward. And we could have something like that in 2026, leading us towards a broader trend. So if you look at where we're at, imagine we get into this, Imagine we get into 2026 over here, and let me try to draw it. So we get into 2026 somewhere here, like here, and we roll into a fairly solid consolidation period, bouncing, and then we rally back on up. So this would be a pretty good layout of what could happen in gold. We could see a move from 2,500 to about 5,000, then roll down to about 3,500, maybe 3,700, back into support, and then roll extremely high up into the 8, 9, 10,000 area for gold. Just really taking off on expansion. Okay. So be aware, gold and silver are looking very solid right now, but we're going to be looking at this we're going to be looking at this low reset, kind of a low reset right here. Looking for potentially the markets to move back down here and retest these lows through the end of the year, maybe in early January. So I still do believe, as you're seeing, why I believe the markets are going to be setting quite a bit higher. But I think we're going to have this low reset. Let me mark it here, low reset, before we get any upward movement. Okay. So big, broad, important, low reset, likely part of the expansion pattern. Same thing's going to happen with silver. Silver's already kind of marking its way through a low price reset. You can see here. Let me drag this out of the way. So silver has rolled downward, broken the previous low, really struggling over here. I kind of think what we're going to see is, I'll get rid of some of these crazy lines so we can see what's going on. So what we're looking at here is kind of a downward sloping channel. And come back here to my line drawing. We're kind of looking at this downward sloping channel. And I would not be surprised to see silver make or test a new low back over here and then strengthen back out of it with gold. So you can see where we're at and you can see how we're playing this out. But it looks like gold and silver are going to struggle through the end of the year until we possibly get closer to the inauguration or past the inauguration before we really start to see a move in metals. So lastly, we are going to come over here and take a look at Bitcoin. Bitcoin is now struggling near the lows of the consolidation pattern right over here. Nice little upward move here, $1,000 upward move. Pretty solid, actually. Nice little flagging potential breakout. You can see here this trend channel on down here. Nice little flag breakout. I would still be rather cautious of this consolidation range that we talked about. This is a perfect, really, consolidation move down to a low, bounce up to resistance, which is again right below the flagging low here. So here's our flagging low, came right to it, stalled. Okay, that's valid, that's legitimate, no problem. And then you can see we've just rolled over many days downward, flagging out here after hitting almost the same low right here, almost hitting the exact same low. Ran into a little consolidation. I would be cautious of a breakdown here after a little volatility, but we could just as easily, as I mentioned to you, roll out of this into an uptrend. So at this point, we're looking for a breakout. We'd have to get above this level here, really getting back above this level, 98,900, or below this level, which is our low flagging, which is 92,200 roughly. So we've got to get above or beyond either this level, 98,950, or 92,000, roughly 200. And that's going to give us our potential move back up here. Now, remember, we have the ultimate high way up here. So we're not cleared for further upward trending until we get above this ultimate high level way up here, which is 108,400 roughly. Ultimately, like I said, the way this looks to me, folks, this looks to me like we're in the midst of a breakdown. I think we're going to be moving down into this lower pattern after this volatility plays out. And I think this is going to be a big kind of a reset low after this big move. So you can see where we're at with crypto, all the lines that I've drawn. Probably need to go through and clean this up. But the long and short of it is we're looking at a reset low. It looks to me like we're going to have some sort of a reset low back in this 82,000. In fact, really, it's more like this 80 to 82,000. 80,000 is a good psychological level, and it lines right back up with resistance and support. Okay, so that's it for today. I'm going to have a busy day, last minute Christmas stuff. Remember, slide through the end of the year, get ready for next year. Like I said, let's make 2025 the best year ever, and every year after that. I mean, I don't know how to make it any more clear. This is what I want everybody to do. I want everybody to start doing this next year, and I want to show you guys how you can target the best opportunities. Trading is not about swinging wildly, like placing bets at Vegas. You just don't go out and put, 25 bucks or $100 on a blackjack table hoping to get a blackjack. You've got to be a little more strategic about it. You got to wait for the right setups. And then when the setups come, you pounce. And like I've been doing over here with my little paper trading account, when they show up, I pounce. I get in there with 3 or 4 or 5 contracts, options contracts. And, just basically I grab my profits real quickly 10, 20, 40%. As soon as I get a nice little 30, 40, 50% gain on it, maybe even 10, 15% if the markets are struggling. But then I'll sell 2 or 3 of my options and let the rest run. Sometimes through the end of the day, or sometimes until I get, a 60, 70% profit. I do that with a small percentage of my trading account every day, try to. And the goal is, I can start nickel and diming myself up into 30, 40% profit fairly quickly. And again, I'm taking my account right here. I'm taking my $1,000 is what I started with, breaking it into 3, and I'm only trading a maximum of basically $300 a day. So I cannot have more than $300 risk per day, no more than 1/3 of my account. And I'm still able to make, almost 50% in 6 days. Granted, we've had some pretty volatile days the last couple of weeks or week and a half since I've started, but I think anybody can do this. And I just want you guys to know it's not about trying to trade everything all the time. It's like yesterday, I traded on the drive back from visiting family and tried to make sure that I was paying attention to what was going on. I risked $68 yesterday. Woohoo. I ended up making about $15. No big deal. It's a very flat day. And tomorrow's another day. The good news is at least I didn't blow up my account, which is what I hear from some people. They blow up their account and they come to me and say, Brad, what do I do? How do I fix it? You fix it by learning that trading is not gambling. Trading is about taking strategic moves in the market when the timing is right. And beyond that, if you're gambling, if you're throwing money at everything, hoping something works, that's not really trading. If you're investing and you're putting money in the long haul, well, then fine. That's a different style. That means you're going to ride out these little blips and you want to be cautious of bigger swings in the market. And I have tools for that as well. But trading is about trying to catch these moves when they are the most efficient, okay? Not when they're just lagging around, not doing anything. And that's what I want you to be aware of is timing and execution of trades is very important. That's what trading is all about. Now, as we move into the end of the year, let's go back to the SPY. I want you to be aware that we're looking at rolling trend, potentially back down into this lower level, and I need you to be prepared for 2025 being a very volatile and difficult year, moving into a 2026 potential breakdown. All right, guys, let's get a good Christmas started here, and I'll see you on Thursday.